After the roller coaster of huge news and releases we've been having for SoFi over the past couple of weeks, this week has been relatively quiet. Not so much from a stock perspective. I mean, the entire market has been going down, a lot of tax loss harvesting there, but more so from a company perspective. The main news this week was Anthony Noto adding to his SoFi purchase on the open market. He bought another $2.4 million worth of stock this week. And as we're wrapping up the year, a lot of my mind is dedicated towards what are some of the main learnings, what are the takeaways for this year, and what can we bring forward into 2023 in terms of expectations or maybe findings for that year. And I found myself rewatching an old interview that Chris Lapointe gave from Mizuho Technologies. This is SoFi's chief financial officer, and I thought it would be an interesting video to make to just share those points as we're wrapping up 2022 and going into the new year for SoFi. So if you haven't been following along throughout the year, I have been making a ton of SoFi videos. I think I have over 40 videos that are just dedicated to SoFi news, SoFi commentary, SoFi analysis, both on the stock perspective and on the company perspective. It is my second largest position. I also do the SoFi Weekly podcast every single week. If you are interested in SoFi and you want to learn more about that, subscribe to the channel for more content. First, let's start off with the SoFi CEO, Anthony Noto, buying $2.4 million worth of shares. The Form 4 came in earlier this week on December 19th, and the purchases were conducted between December 15th and December 16th at an average price of $4.59 per share for a total of 525,000 shares or $2.4 million. And when we combine this with last week's purchases, Anthony Noto has bought over $7.5 million worth of stock in the open market over the past 10 days, which is of course very bullish to see. I'm going to be keeping an eye to see if there's any more future purchases that we can have from Anthony Noto in the next coming weeks, or maybe for the remainder of the year. I don't know if he's done buying, especially because these were larger chunks, but if you remember in June, he was buying pretty much dollar cost averaging all throughout, like every single week basically. So it's very possible that that restarts again back in 2023. But the main part of this video is dedicated to that interview with Chris Lapointe. The original interview was conducted at the end of Q1, so a lot has happened in SoFi specific news since that time. But Mizuho actually re-released that interview to their own YouTube channel and also their website, so they're promoting it again. Clips began surfacing around Twitter. One of them was Riley tweeted out a clip of the interview, which gave me a chance to revisit that interview and rewatch it with the context of having known 2022, looking forward into 2023. Now, another factor that really interests me about listening to this interview in particular is that Chris Lapointe doesn't really do many interviews. That's mainly Anthony Noto that goes into the conferences and the interviews, but the only time we get to hear from Chris Lapointe is really in those earnings calls. And from those earnings calls, if you've ever listened, it's very clear to see that he is the number 2 person at SoFi. He has a ton of great insights in terms of where the company's going, but also he has great visibility in terms of what the future holds from a financial perspective from SoFi. So just for context, Chris Lapointe and Anthony Noto both worked together at Goldman in the past, and more recently, Chris Lapointe joined SoFi from Uber. And this interview, which I'll attach in the description below, it's over 30 minutes long, and I just wanted to summarize 2 quick points in this to frame our thinking for 2023. Now, over those 30 minutes, there was a whole ton of different questions ranging from the brand awareness in terms of the value propositioning and the messaging, making SoFi a household brand and how that happens. They talked about making SoFi a household brand name. They talked about the SPAC merger. They also talked about the competitive advantage that SoFi has overall. And normally when making a video like this, I would dive much more in depth, but since this interview was conducted so long ago, back at the end of Q1, I only wanted to cover these main clips. The first clip is when the interviewer asked Chris Lapointe around SoFi's competitive advantage. Chris Lapointe answers this in a very structured way, explaining the financial services productivity loop. He started out first talking about the one-stop shop aspect, which ensures future business backed up by trust and a differentiated product offering. He talked about the competitive advantage as it leads to better revenue per member. He also talked about the unit economics by highlighting the vertical integration, and finally briefly touched on the AWS of fintech aspect, which aims to reinvest all their profits back into the business.
Yeah, and I think that dovetails into my next question, which had to do with your differentiator, and that relative to other high growth fintechs, particularly post first quarter earnings, yours were extremely good, but a lot of the market reception wasn't there. Maybe you could talk a little bit about that.
In order for us to achieve that mission and really differentiate ourselves, what we do at SoFi is we deploy a strategy that we call the financial services productivity loop. And this strategy has three components. First is building a one-stop shop where each and every one of our products that we offer is best of breed, which obviously increases our ability to build trust and reliability with the member so that we win the next product after that, and then the next product after that. The second component is driving superior unit economics in each one of our products, which only reinforces our ability to drive even more variable profit. And then third is building the AWS of fintech by leveraging the infrastructure that we've built into our business via Galileo and more recently Technisys, which has attractive returns that we can then reinvest in more innovation, more valuable products, and better services. So I'll hit on each one because it really helps paint the picture for why we're differentiated. First, in order to win by leveraging the financial services productivity loop, each and every one of our products needs to be best of breed. So we work extremely hard, and all of our GMs work extremely hard to differentiate across four dimensions: fast, selection, content, and convenience. On top of that, we want each and every one of our products to work better when they're used together. And the reason that that's critically important is because when a member chooses a SoFi product, we need to build that trust and loyalty such that when they need the next product, they end up coming back to SoFi. And when that happens, the revenue that we generate per member increases significantly, and we don't have that second large acquisition cost associated when the member takes out the second product, which moves us much closer to achieving our goal of having the highest LTV or lifetime value in the industry. This is a huge competitive advantage for us as it allows us to offer the best rates on loans and checking and savings and the best products and services overall. The second element of our strategy is driving those superior unit economics. Vertical integration really helps in driving unit economics, and we've seen that in our lending business where we have built end-to-end processes and technologies that enable us to iterate faster, have more data, and deliver better services. If you think about it, if each and every one of our products has superior unit economics, we can again invest in better rates, prices, products, and services. And then the third element is building our tech platform in line with our vision of building the AWS of fintech. So we ended up purchasing Galileo back in May of 2020 because we fundamentally believed that we needed to vertically integrate our checking and savings business in the same way that we did for lending. It has certainly allowed us to innovate in a much faster way at a lower cost. As we drive innovation at SoFi, we also drive innovation at Galileo. And one of our main objectives with our Galileo partners is to create more value for them than they can create on their own or with other partners. So our investment in this platform raises the tide for all companies and consumers overall, which drives better adoption in this industry in which we participate.
Now, the second and the final major clip is around contingency planning. And I wanted to include this to frame our thinking for 2023, because throughout this year, SoFi has needed to contingency plan on COVID, as well as the student loan moratorium, which Chris talks about in that interview, but it's also applicable today because the moratorium is still front and center in people's minds, even today, 1 year later almost. And the overarching point that I wanted to highlight around contingency planning is diversifying the business, focusing on the sustainability of every single product line as a standalone, structuring the finances to prepare for a recession, and overarchingly thinking of potential blind spots. All of these things are the reasons why, despite all that has happened on a macro level in 2022, SoFi has beaten every single one of their earnings forecasts and their expectations all throughout the year. And I don't think that's really talked about a lot. This plan A, plan B, plan C, and plan D approach to what could happen out there. And 2022 has thrown a lot of curveballs. And I think for 2023, why this stuck out to me, this interview, is because it highlights the executives' systems thinking around holistically planning for contingencies when encountering blind spots.
Do you have any other recent experiences with a challenge like this that we haven't already talked about? Because I think the last couple of years has been laden with them.
Planning has been critical to being able to moderate the impact of encountering these blind spots. What we've done is we've built a diversified business and always planned as much as possible for the unexpected and have built our products with the durability to survive even the most unexpected of outcomes, such that even when headwinds are faced, we're able to deliver strong results for our shareholders. We have a maniacal focus on unit economics, and we structure each and every one of our P&Ls in a way that ensures that each of our businesses is sustainable and durable on a standalone basis. And one of the most critical things that we did when we first joined back in 2018 was to reduce our loan originations and really focus on quality and durability. And we also reset our philosophy and started managing the business to a 40 to 50% variable profit margin while seeking to maximize variable profit dollars. You may ask, well, why 40 to 50%? And that's because in a recession, history has shown us that losses increase, anywhere between 20 and 30% while going through that recession. So managing to a 40 to 50% margin allows us to still deliver a profit in a very tough economic cycle. This approach has certainly benefited us meaningfully over the last several years and continues to do so every single day. I would probably call out the December 2021 extension of the federal student loan moratorium. At the time, it was almost guaranteed that the moratorium was expiring 1 month later in January of 2022. Servicers had started sending out their bills to borrowers. We were starting to see really strong uptick in demand from borrowers wanting to refinance. And we had recently finished our comprehensive annual planning process, assuming that we would have a full year of benefit of normal course student loan refinancing volumes in 2022. And we had also presented that plan to the board and got approval. When the moratorium got extended, luckily we had been planning and had scenarios run. We were able to roll out a contingency plan, redeploy capital as necessary, and resources were quickly able to mobilize against slightly different priorities. And we were still able to deliver record results in Q1, which we're really proud of.
The full interview, which I mentioned is in the description below, has much more information around SoFi's members, differentiators in the product offering, regulation, which Crystal Point harped on is much needed in the industry, Galileo and Technisys, which he touched on as well. However, I think all of these are points that we've covered throughout the year in many different interviews and conferences and pieces of news and press releases that have been issued out. And if you've been viewing this channel consistently, you should be at this point up to date with all of these aspects. But as I wrap up the year and look towards 2023 in the context of SoFi, the main aspects overarchingly from a 50,000 foot view, super high level, that I'm looking for is number one, having a differentiating factor in their core product offering, something to set them apart from their competitors, which Crystal Point highlighted. And the second aspect is that contingency planning, because if 2022 has taught us anything, it's that things can go wrong. We can have curveballs, we can have a stock be down 70 to 80%, and there's a whole bunch that goes along with that. And contingency planning and thinking about different alternatives as to how do we pivot based on what the market is telling us is really important for an executive management team to be thinking about. And so it's very reassuring, at least to me, that the team is consistently thinking about this, and it just reflects in SoFi's positive results. Anyways, I hope you enjoyed this video. If you do enjoy SoFi content, make sure to subscribe to the channel. Make sure to check out the SoFi playlist. I put all of my SoFi videos into a single playlist. Like I said, I think that's over 40 videos long. Make sure to tune in to the SoFi Weekly podcast for a more discussion-based conversation. And happy holidays. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.